Good morning, good afternoon, and good evening, all you orangutans, apes, gorillas, monkeys, primates, whatever you are, whatever you're calling yourself. Today is a beautiful day, and it's been a beautiful week in the stock market so far, especially with AMC and GameStop. If you're invested in both, I'm primarily invested in AMC, and I have a small position in GameStop as well. So I'm going to talk about my exit strategy when it comes time to start figuring out how I want to exit the squeeze. Okay, we do see the squeeze coming. We've seen nice progression throughout the week. We've gone up roughly 75, 85%, something like that. And it's time to start thinking about a plan. I mean, if you guys haven't thought about a plan and how you're going to exit, it could lead to disaster, right? Especially when FOMO kicks in. If you exit the position too soon and then you want to get back in, you're selling at a lower price, you're buying in at a higher price, and then if the price dips and you panic, you can actually wind up in the hole and not make any money, okay? So it's a really good idea to jot down or write down what your plan is, what your exit strategy is, and I'm going to share my plan with you guys. So let's get started. Okay, guys, so my exit strategy for getting out of AMC covers a couple of things. Number one, I want to cash in. Number two, you need to plan and have a tax strategy. And number three, you should be thinking about reinvesting some of your attendees, some of the money that you make, some of your profits, okay? So right now, I have a total of 2,160 shares in 4 different accounts. I use TD Ameritrade as my primary brokerage. I'm not a big fan of, Robinhood, especially with what happened after the last squeeze. I really don't trust that platform. We know that they get money from Citadel and sell our data to them, and that's just not something that I'm cool with. So, and I've actually been trading with TD Ameritrade for about a year now, and I also have an account with Webull as well. So I have 4 accounts. My first and biggest account is my main trading account. I have 1,650 shares in that account. My second account is actually a college fund for my kids. I have 330 shares in that account, and I have 3 kids, so each one has 110 shares. I also have a Roth IRA that I set up through TD Ameritrade. Now, if you guys are not familiar with Roth IRAs, it's basically an IRA that you set up with money that's already been taxed. So as long as you put your money in there, you invest it, you trade, whatever you do, any profits that you gain by the time you retire, when you cash out your money or stop pulling money out, it's all tax-free. Okay, this is a huge benefit because you're getting into it with money that's already been taxed. And as long as you keep the money within the Roth IRA until your retirement age, that money is protected from taxes. So I'm in my mid-40s. I'm thinking I got another 15, 20 years before I retire. And that's a really good amount of time that I can really build a nice nest egg for myself. Hopefully, that's the idea. Now, I'm also a real estate broker. I also talk about real estate. Leave a comment down below, and if you're interested in seeing how you can use a Roth-type IRA for real estate investments as well, okay? We talk about both in this channel. I've just been focusing more on stocks lately, but I will be doing stuff with regards to real estate and answering people's questions, okay? And then my fourth account is a small Webull account. It's just an account that I opened up with $1,000 last year. I tripled my money in about 6 months, and then when all the growth stocks, when the growth sector plummeted, actually it started right around the time AMC and GME squeezed. That's when the growth sector started declining as well, and I invest heavily in the growth sector. So it might be a good idea for me to diversify a little bit with more blue chips and things like that. But again, I've been investing for about a year, and you learn as you go. So in my small account, I only have roughly 60 shares, and in my Roth IRA, I got 120 shares. Okay, so what's my plan? Well, the first part of my strategy, everybody needs to do what's best for their financial situation. If you can afford to hold to $100 or $1,000, $10,000, $100,000, whatever you think the ceiling or the floor of this squeeze is going to be, hold. That's up to you. I'm going to sell at different increments, okay? Now, before you guys start leaving hate comments and things like that, listen, I'm not selling out of my entire position. I will be holding a small percentage of my shares at the end and letting it ride throughout the squeeze. But what's the purpose of this movement? A lot of us want to stick it to the hedge funds because they've been committing tons of fraud and robbing the retail investor for decades, okay? And we want to get back at them, you know? We want to make them feel what we've been feeling for all these years. We want them to hurt, okay? But at the same time, we also want to make money. We want to make life-changing money to better help our families and ourselves, okay? So if you haven't created an exit strategy yet, it's a really good idea to write it down so that you know what you're doing. If you're just going to wing it, it could potentially lead to problems, okay? Now, again, it depends on your situation. You might only have 50 shares or 100 shares. I've seen different videos talking about, over 3.2 million AMC apes out there, investors holding on to AMC stock. And, I've heard different averages of even if everybody's holding on to 100 shares, 200 shares, 300 shares. Look, whatever your position is, do what you feel is best for you. Okay, you decide. So like I said, I'll be selling at various increments while the stock goes up to recoup my initial investment to start. Okay? So my average purchase price on all my shares is roughly $11. I mean, I bought in at higher amounts, I bought in at lower amounts. So it's roughly $11. And like I said, I have 4 accounts. So my primary account, 1,650 shares at $11. My initial investment was $18,150. My second account, my kids' college fund, 330 shares at $11 with an average initial investment or a total investment of 3,630 shares. My Roth IRA account, 120 shares at 11, that's 1,320. And my Webull account, that's just, I play with it, you know what I mean? I want to just see, how much I can grow it as the years go by. Like I said, last year I tripled it. I would love to triple it again this year at least. Maybe more, especially with AMC. I got 60 shares in there. I could go 10x, 20x, 100x, who knows, okay? But this is the breakdown of what I have my money in and how many shares I have. I have 2,160 shares. Okay, so step 1. I'm going to sell 1% of my position at $5 increments until I recoup my initial investment. So I'm only going to focus on my primary account, my big account, so that you guys can see what the breakdown looks like. Okay, so at $20, I'll sell 17 shares for a total of $340. And I'll have 1,633 remaining shares. Okay, next at $25, I'll sell 16 shares at $25 for $400. Okay, I'll have 1,617 shares. And I'm going to keep going. $30, $35, $40 for the most part. 16 shares per transaction. And you can see that each transaction is making a decent amount of money. And I'll keep doing this until I recoup my initial investment, like I said. So right now, if I keep going at this trend, by the time I recoup my whole investment, for the most part, I would have sold 302 shares worth $18,075. Step 2. Now I'm going to sell my remaining shares at 10%, or 10% of my remaining shares at $50 increments. Okay? So I'm going to sell 135 shares at $150, and I'll gross $20,250. And then you can see that I'm going in $50 increments. So at $150, $200, $250, $300, etc., up to $600, I'm going to sell the majority of my shares. And you'll see that with this strategy, I would have sold another 878 shares for $266,750. Now, guys, look at this, okay? I know a lot of you guys are young investors. There's also a lot of whales in our community. But you can see that with one transaction, the smallest transaction is $20,000. Then it goes to 24, 27, 39, 31. There's a lot of people out there that are making minimum wage, and this is life-changing money, okay? People have to work. Some people only make $30,000 or $35,000 working full-time. They have to work 2 jobs just to get by. Okay, and in one transaction you can make this kind of money. Again, this is based on my situation, but you guys can have more shares. Again, figure out what your situation is and what's best for you. This is just my strategy, but this is my plan. And you can see that using step 2, I grossed over $266,000, and if I combine step 1 with step 2, I would have sold 1,180 shares for $282,825. Okay, now this is where it gets really exciting. You don't need a lot of shares, okay? You want to protect yourself, but at the same time, once you've pulled out enough money to recoup your initial investment, and then you've pulled out enough tendies to, start making a little bank, okay? This is where things can get really exciting, okay? Step 3, I'm selling 10% of the rest of my position at $1,000 increments. So you can see here, I'm starting at 47 shares at $1,000. That's $47,000. Then it's 43 shares, 39, 35, 20, 32, all the way down to 17 shares at 1, 2, all the way to $10,000 a share. And you can see right here that I would have only sold 279 shares for $1.4 million. Okay, this is life-changing money for me. Other people, like I said, we have whales in here, it's pocket change for them. So again, plan accordingly. But total sold would have been 1,481 shares for $1.7 million so far on an initial investment of $18,150 for this account. So you can see how this can really blow up at the end. Pull out your initial investment and you start building yourself a nice little nest egg or a plate full of tendies or whatever. Okay, this is the dessert. My step 4 is what I'm going to do with my remaining 169 shares for this account. And I'm going to hold. I'm going to hold until I see the downtrend of the squeeze. Okay, it could be 10,000, it could be 100,000 or more. I mean, we don't know. But keep things in mind. Keep this in mind. It's really important, okay? And I can't stress this enough. Everybody's talking about hodl till you get to $100,000. That's the floor. Okay, you have to realize that there will be liquidity issues. If everybody holds on to their shares all the way until the squeeze ends and it starts to come down, and everybody's trying to flood the market with shares and trying to sell, well, remember, you can't sell unless there's buyers, right? And if everybody's selling at the same time and you see that the stock is plummeting, who's going to be buying on a downtrend, right? There will be some people that have FOMO and they're still trying to get in, trying to buy the dip because they think it's a dip and they'll still buy shares. But think about it, guys. We have a float of 493 million shares. And with all the synthetic shares out there, who knows what the actual amount is? It could be 500 million, 600 million, a billion. We don't know. But if everybody's trying to sell at the same time, there's not going to be enough buyers to buy your shares. The hedge funds are not going to be buying those shares. They're going to wait until the stock plummets. And I'm okay holding on to 169 shares. I think AMC has value. I think its fair market value is right around the $20 to $25 range. Okay, and if I hold on to 169 shares and the value of the stock, if I hold on to 169 shares and the price of the stock drops all the way back down to $15, $20, $25, I'm okay with that. Remember, I have an initial investment myself of $11 a share. I'm still profitable, and I already pulled out a lot of my money. So I'm okay with 169 shares. If I can sell on the downtrend of the squeeze, great. Who knows what I'm going to be making? Could be, millions of dollars more if it goes to $100,000 a share. We don't know. But remember, if you're hodling and holding all the way to the end and everybody's trying to sell at the same time, you will have liquidity issues. You won't be able to sell your shares. It's going to be a disaster. The biggest thing you can remember on this, remember, take your profits along the ride. Bears, bulls, and apes get fed when taking profits. Pigs get slaughtered. Okay, that's really important. So guys, once you figure out your plan and you write down what it is that you're going to do and what your exit strategy is, you need to figure out what you're going to do with your money. You will have to pay taxes. So remember, this is not going to be capital gains tax unless you've been holding on to AMC for over a year, even 2 years. A lot of this will be based on your income. Talk to your accountant, your tax professional to see what the damage would be with regards to your taxes. But plan to put aside, the more money you make, obviously if you get into $1 million, you should probably save at least half of that to cover your state and local and federal taxes. I know some states out there that you guys are in don't pay state tax. You guys are lucky. Where I live in the Northeast, I have to pay a state tax as well. So plan accordingly. And then what are you going to do with the rest of your money? Well, me personally, I'm going to put some of that money, like I said, put money in my Roth IRA, maybe look into some other options or talk to my accountant about how I can shelter some of that money and not pay taxes now. You can set up a regular IRA. The Roth, like I said, is money that goes in there after you pay taxes. Okay, that's not going to protect your money or reduce your tax burden if you put your money in there. So you can set up a regular IRA. I'm sorry, a SEP IRA. Maybe some other investment vehicles where you can invest money that's pre-taxed and then let it grow, and then as you cash out, that's when you pay taxes on the back end. Okay, so me personally, what I'm going to be doing, I'm going to be looking into some of those options. I'm going to invest part of my tendies back into the stock market, and I'm going to invest in some blue chip companies, most likely Tesla. Tesla's probably going to be my biggest investment. I'm still going to hold a lot of my positions in the growth stocks that I currently have. I'm a huge believer in Palantir. That's one of the growth stocks that I have that I'm probably going to increase my position on. And I'll dabble. I'll day trade. I'll swing trade. Probably get into some dividend investing and actually make my tendies make me money on a quarterly basis in stocks that pay dividends. I'm going to put some in real estate. And like I said, I'll talk about it in another video if you guys want. Leave a comment down below. If you want to see how you can grow your real estate portfolio in an IRA similar to a Roth. And then the rest, I'm buying myself a Tesla Cybertruck. I mean, that's my gift to myself. I already pre-ordered it last year. I already had the intention of buying it. So, my tendies are going to pay for that cash. And who knows, there'll probably be some other toys that I get myself, my family. I will donate some to charity, help some family, things like that. So, guys, thank you for watching. If you thought that this information was valuable, please subscribe, like the video. If you hated the video, give me a thumbs down if you think I deserve it. It's up to you. Again, thanks for watching. I'll see you guys in the next video.